Uranium. Uranium price is at the highest level in over a decade, since roughly the Fukushima disaster in 2011. The price is now above $66 per pound. So let's see what's going on to the uranium price, especially from the perspective of price cycles. Welcome to myfinanceteacher.org, where we do have a look at a range of assets, including energy with a specific focus on this very detailed, perhaps best on the internet, uranium report. In this and other of my uranium reports, you'll find some of the most important fundamental factors, as well as some of the most important recent developments in the uranium industry. Today, though, let's have a look at the price action. And as we do like to look at price cycles, let's talk about cycles. Looking over the years, usually uranium price cycles last for just under half a year. The average duration since middle of 2019 has been around 154 days long. Although the cycles might stretch or shorten, the shortest cycle over the last 4 or 5 years lasted for only 91 days, with the longest one lasting for 249 days. Most of the cycles, as you see historically, break to above the 50-day moving average consistently for at least 5 days or much more during their topping patterns, and during the cycle lows they do break below the 50-day moving average, again consistently for at least 5 days or more. These are some of the signs how you might identify cycle lows and cycle tops. For more details, join us at myfinanceteacher.org. Zooming in though, this most recent cycle low that's in July this year has been somewhat tricky. Although most of the cycles do break below the 50-day moving average for their cycle lows, this recent low only came close to testing the 50-day moving average rather than breaking below it with any sort of consistency. Since then we are in a new cycle, which has already been going on for 66 days. That's slightly over a couple of months. Usually these cycles last for anywhere between 5 or 6 months. So while we still perhaps have some time for upward momentum in the uranium industry, things are clearly getting overbought, with RSI at 99 right now on the uranium price itself, and with prices, as I mentioned, at a decade high. Among some of the other signs for a sort of a topping pattern is this very wide Bollinger Bands and the price poking above those Bollinger Bands multiple times. You can see somewhat similar picture if you look at URA, that's the ETF for some of the top uranium producers. We see Bollinger Bands are widening, they are already pretty wide, and price has poked multiple times above that Bollinger Band. It's also relatively stretched above the 50-day as well as the 200-day moving average. And if you look at the 14-day RSI, well, it's actually at the highest level over the last 2 years. The last time we saw the RSI that high was all the way in September 2021. And if you look at some of the possible tops for the ongoing cycle, looking at URA specifically, one likely scenario could be testing this resistance that's around 28.5, 28.6, which is based on a couple of previous cycle tops. That would be in September 2021 and in April last year. So while in the very long term I'm still very bullish on the uranium industry, very recently, that's on the 14th of September over here, I started reducing my position. So far only selling about 10% of my uranium investments. And of course, all of the moves I make are reflected over here in the model portfolio that's for the members at myfinanceteacher.org. In the near term though, as uranium price inches closer to that resistance, I might reduce my uranium positions a little further with the goal of reaccumulating near the cycle lows. Again, as I'm still convinced that in the very long term, uranium price is going to be significantly higher, as well as the prices of these uranium producers. So perhaps we might see some sort of a cup and handle formation if the ongoing cycle continues higher, perhaps for another couple of weeks before a bit of a cool down into the cycle low, giving us a bit of a cup and handle, which is usually a bullish formation. Break out above the handle, retest of the previous resistance, that might be the next cycle low before the new rally into a new cycle takes place. But that of course is in the very long term. In the current cycle, perhaps some caution is advised anywhere from now to over the next few weeks. Coming back to the very long term though, one way to look at the market sentiment for uranium as well as uranium producers specifically is looking at this ratio of uranium producers to uranium price itself. When this ratio is below 0.4, that's when historically it's been a good opportunity to buy into those uranium producers. That's when the producers are somewhat cheap compared to the price of the commodity itself. These oversold levels took place in early 2016. That's the end of the bear market in uranium. Prior to that year, uranium price had been declining significantly. And of course, more recently, with everything dropping down into the pandemic low, another oversold condition was down in 2020. And if you look at what's been happening more recently with this cup formation on the uranium producers, while uranium price has declined as well, it didn't decline as much. So this ratio of producers to the commodity price has declined, has cycled, again, all the way from overbought levels down to recent oversold levels, and it's now coming out of those oversold levels. So in the longer term, this chart is mostly helpful over the years. Producers are clearly going to cycle back up to overbought levels. Again, that's over the longer term. In the short term though, again, some caution might be advised as this RSI is well into overbought area and the price is approaching this resistance zone. If you zoom in a little bit, you will also notice that the price action over the last week or so has been somewhat parabolic. So to summarize, together with the members at myfinanceteacher.org, we've had very comfortable gains over the last several months. And in the longer term, I'm sure we will continue to enjoy even more significant gains. In the shorter term though, perhaps we'll reduce our positions slightly. And of course, for much more details, make sure to join us at myfinanceteacher.org. Before that though, make sure to give this video a like and share this video with your friends. Have a marvelous Monday. Bye bye.